Africa Market Update, the 4th of July 2026. Africa enters the weekend with several significant developments highlighting the continent's continued focus on infrastructure investment, economic resilience, and regional integration. One of the biggest milestones this week was the financial close of the $753 million Lobito Corridor Railway project in Angola. The Africa Finance Corporation (AFC), together with Eagleston, helped structure the financing, which includes $553 million from the U.S. International Development Finance Corporation (DFC) and $200 million from the Development Bank of Southern Africa (DBSA). The investment will fund the rehabilitation, upgrade, and long-term operation of the 1,300-kilometer rail corridor linking the port of Lobito to the Democratic Republic of Congo border. Once completed, the corridor is expected to significantly improve the movement of critical minerals and strengthen regional trade across southern and central Africa. The African Development Bank (AFDB) also released its 2026 African Economic Outlook following its annual meetings in Brazzaville. Despite ongoing global challenges, including elevated interest rates and geopolitical supply chain disruptions, the report projects Africa's economy will remain resilient. Continental GDP growth is forecast at 4.2% in 2026, a slight moderation from 4.4% in 2025, before returning to 4.4% in 2027. Growth is expected to remain uneven across regions. East Africa continues to lead the continent with projected growth of 5.9%, although higher import costs are expected to weigh on momentum. West Africa is forecast to expand by 4.7%, while North Africa is expected to grow by 4.0%. Central Africa is projected to improve to 3.8%, supported by resilient oil revenues, whereas Southern Africa is expected to trail at 2.1%, reflecting ongoing energy sector adjustments and softer mining production. A key outcome from the AFDB meetings was the launch of the Brazzaville Appeal, a collective commitment by governments, civil society, and philanthropic organizations to modernize Africa's financial architecture. The initiative argues that stronger tax collection, more efficient public spending, and curbing illicit financial flows could unlock as much as $1.43 trillion in domestic capital each year, reducing the continent's dependence on external commercial borrowing while creating a more sustainable foundation for long-term economic growth. Meanwhile, regional integration continues to gather momentum. South Africa's cabinet approved the submission of the SADC Protocol on Industry to Parliament for ratification, reinforcing the region's commitment to industrialization. The agreement seeks to move southern African economies beyond exporting raw materials by promoting integrated regional value chains, expanding manufacturing capacity, and increasing the production of higher value-added goods. The protocol is expected to complement the broader objectives of the African Continental Free Trade Area by strengthening intra-African trade and regional competitiveness.